Bismillahirrahmanirrahim. Assalamu alaikum. I am Syed Akif Shah, lecturer finance at Institute of Business Studies, Kohat University of Science and Technology. Title of this course is Principles of Accounting, and the course code for this subject is BS 161. This is our lecture number 28, and the topic for today's discussion is making financial statements from an adjusted trial balance, and after that we'll discuss the closing entries in detail. The outline of this lecture consists of the discussion related with understanding the accounting cycle. In this very lecture, we'll complete our accounting cycle. You will learn how to make the financial statements from the fifth step, where we have generated our adjusted trial balance for a numerical case explaining problem 3.11 on page 137 of the recommended book. So basically, I strongly urge and recommend to the listener of this lecture to first listen to my previous two lectures, because those have explained the accounting cycle where we have done the adjusting entries, and as well as after adjusting entry we have incorporated those entries into our adjusted trial balance. So now we have already explained the fifth step, and we are on the fifth step of the accounting cycle. Let me show you as a glimpse. So we are basically on this fifth step, starting from left, journalizing, posting entries to the ledgers. We have already understood making the trial balance, and as well as in our previous two lectures, we have understood how to make the monthly or year-end adjustment or adjusting entries, and we have understood and learned about how to make the adjusted trial balance. So basically this lecture will continue on with the previous example to discuss the sixth step, that is to make the financial statements. After making financial statement, we have to close down the nominal account in our seventh step. And after closing down the entries or nominal accounts, we'll make an after closing trial balance. So basically, this lecture will address the sixth, seventh, and eighth step of the accounting cycle, in which we'll make the financial statement from adjusted trial balance. We'll make closing entries, and then after closing trial balance. So let's start. So here it is, our example, a numerical illustration pertaining to the different section in accounting cycle steps which will be completed in this illustration. And I assume that you have already listened to my previous lecture, and as well as have full grip on this supplementary data, where we have started the discussion related with Hampstead Realty, that consists of obtaining listing houses and then offer them or sell them to the prospect buyers. And the question or the numerical illustration is also accompanied with the trial balance, which have multiple accounts like cash, account receivable, M. Valentino capital, commission earned, and later on the different expenses on the debit side and the credit side of the trial balance. Once again, I assume that you have listened to my previous lecture, because this lecture is in continuity to my previous lecture, where we are going to complete our accounting cycle. Let me give you a quick overview that in the first part of the instruction, we have made this adjusting entry for depreciation of building. Then in the same part A, the instructor was asking us to make another adjusting entry for office equipment, what we have made and discussed in detail in the previous lecture. In part B, the question was asking us to make an adjusting entry for office supplies used during the month of March. After which in part C, the illustration was expecting us to incorporate these adjusting entries into the adjusted trial balance. And after incorporating those adjusting entries as highlighted in green before you, we'll move ahead towards part 4, and let's go back to the illustration and read out what the instructions are requiring us to do in part D. Let me select the pen, and you will start this lecture from part D, that is the accounting cycles step number 6 to make the financial statements. So the instruction D required us to make income statement and a statement of owner's equity. So two basic financial statements and a statement of owner equity for the month of March. And as well as along with that, the instruction is requiring us to make the balance sheet at March 31st, but not in a tabular form like in left and right side, rather than in the report form. So we'll learn how to make a report form balance sheet as well. Furthermore, the instruction states that assume no additional investment by the owner. Owner did not invest any further investment into the company's cash account or into the bank account during March. So basically what we are expected to do in instruction D is to make the financial statements. So let's move ahead towards the accounting cycle. We are on step number 5, already discussed and made and explained well how to make adjusted trial balance. Out of this adjusted trial balance, now we are required in this illustration to make the financial statements, that is the income statement we have to make shortly, then owner's equity statement or statement of owner's equity will be made shortly, and finally, as I have already explained in the initial lectures during the classroom, that balance sheet is something which required to be made at the end or at the last stages of accounting cycle. So let's go back to our adjusted trial balance. Here it is, our adjusted trial balance, which will be utilized for making the income statement. So we have to understand our adjusted trial balance and its sections in detail. After analyzing, you will be able to make the first financial statement, which is named as income statement, by obtaining the relevant data from adjusted trial balance. So be aware that this is step number 5, and the step number 6 of accounting cycle states to make income statement or financial statement from adjusted trial balance. And remember students, this is adjusted trial balance, not a simple third step trial balance, because we have already adjusted 6 adjusting entries in the trial balance. So we can analyze our adjusted trial balance starting from cash up to the accumulated depreciation office equipment. These are titles which are something relevant to the asset portion of the company. After that we have only one liability of the company. Afterwards we have equity or capital portion of the company, which is Hampstead Realty. And just after that we have started to mention the revenue of the company. It's mentioned over there, which is named as commission earned. After a single revenue title, we have bunch of expenses over there, starting from advertising expense to up to the depreciation expense office equipment. So the matching principle states that the revenue and all expenses of the same time period must match with each other in order to find out either the company is in profit or in loss. So in part 4 or part D, the numerical illustration in this part D is expecting us to make an income statement. And how to make that? We have to first of all mention the company name at the top. Afterwards, the financial statement name should be clearly mentioned, which is income statement over here. After that, we have to mention the date in a specific manner, looking like this one, because this is a running operation kind of financial statement. So we have to mention for the month ended March 31st, 2001, because this statement is covering one particular time period, which is starting from March 1st to the March 31st. So this is covering basically a period of time, and you have to mention the date in this particular pattern, not like simply March 31st, 2001. Otherwise, it will be considered as an error by you. You have to give a date in this particular narration type. So after following these steps, let's come towards the real section of the income statement. So the income statement is basically revenue minus expenses, which the matching principle also elaborates. So therefore, we have to subtract all our expenses from the revenue. You can give the title of the revenue and go back to the adjusted trial balance and find out the revenue section in your adjusted trial balance. So we can see that there is only one revenue, which is titled as commission earned by the company. So you can pick up this value, and as there is no debit and credit involved in income statement, so therefore you can directly go and write down the commission earned into the rightmost column. You can omit these division of lines if you would like to remove these lines from the income statement, because these are just for explanation purposes. And if you are expert enough to write in a proper sequence, straight horizontal, not horizontal, but in a vertical fashion, in a straight way, then you can simply omit these division lines. So there is no debit and credit involved in the income statement, let me tell you, and you must be clear about these two phenomena. This is a straightaway income statement. If you would like to remove these lines, you can do so. These are not relevant at all. So commission earned is 20,000, selected from the adjusted trial balance. After that, you have to go back to the adjusted trial balance and subtract all the expenses available there. So less expenses, and we can notice that the final portion, which is starting from the advertising expense, automobile rental expense, salaries expense, telephone, office supplies, and the depreciation expenses. This is basically all the expenditures done by the company to generate this $20,000 revenue. So let's bring all this title to the next step. Under the heading of less expenses, you have to clearly mention all the titles of the expenses clearly, and as well as in a straight fashion, you have to write down the relevant expenses values. So after adding all the values in the rough section of this income statement at the left hand side, you can insert a single line beneath these values and sum up all these expenses and bring them to the final column of income statement. And this, after summing up, the final total expenses bear by the company for generating this revenue is 9,950, and it should be covered in the bracket. And when the brackets is there, it means that you have to subtract, this value is actually negative, and you have to subtract it from the top value or the upper value. So after simply subtracting 9,950 expenses from the revenue, the company's net income come up with $10,050. So this is the way you can use the adjusted trial balance for making your income statement. The next instruction under part D require you to make the statement of owner equity. So I'll not waste my time, rather quickly go through with the statement. Company name, you have to mention the title of the financial statement clearly, that is statement of owner's equity, as the instructions was requiring you to make the second financial statement as well. The date pattern for statement of owner equity is carbon copy of what we are using for the income statement. It is for the month ended March 31st, 2001. Now, what is owner equity statement or the statement of owner equity? As the name highlights that we have to record the data related with the equity portion of the company. So for equity portion, once again, we have to go back to the adjusted trial balance. Here it is. Let me remove all the previous highlighting. And we have to find out the beginning capital of the owner with the title of M. Valentino Capital. And its value is $136,650. So let's move ahead and first of all write down the beginning of the years or of the period of M. Valentino Capital. It was $136,650. Afterwards, let's go back once again to the adjusted trial balance, and we have noticed that owner has withdrawn certain amount out of the business with the title of M. Valentino Drawing. So owner has basically withdrew 4,500 from the business. Therefore, the capital portion of the company will decrease by 4,500. This is the reason in the statement of owner equity, we have subtracted 4,500 as M. Valentino Drawing from the capital portion of the company. This bracket sign shows that we have to subtract it from the top value, which is $136,650. So after subtracting, you can insert a single line beneath these two values, and the remaining capital with you is now $132,150. The final step for you to complete the statement of owner equity is to add up the net profit or the net loss what the company has realized in this particular span of time period. So you have to go back to your previous step in your income statement to find out either the company has earned certain profit or has incurred certain loss in that particular time period. So we can see that in our previous financial statement, the company has generated net income of $10,050. So whenever there is a profit by the company, that profit belongs to the owner, and whenever there is a loss to the company, that loss is also belonging to the owner equity section. So in case of profit, you have to add up into the owner equity. In case of loss, you have to subtract it from the owner equity section. So carry forward this profit to the next section. In the owner equity, we have to add the net income. In case company has incurred loss, in that case, we have to subtract it from the capital portion of the company. So we are adding this $10,050 as highlighted in green. Once again, you have to insert a single line beneath these two values of 132 and 10,000, and after summing them up, the final ending of the year's M. Valentino capital come up with $142,200. At the end of this value, you have to put the double line in order to represent that the question has closed down or the financial statement has end up over here. So this is the way how you can make the owner equity section. Now coming towards the third part of third instruction of the part D, that is to make balance sheet in a report form. So let's see how to make a balance sheet in a report form. You have to mention the company name at the top. After that, the financial statement name as mentioned, balance sheet, and you can insert report form in front of it to represent that this balance sheet is in a report form, not in a left and right hand side format, right? And then finally, you have to mention the specific date. The date method to mention or the procedure rule for mentioning the date in the balance sheet is March 31st, 2001, and it is quite different than what we were using in income statement and as well as statement of owner equity. So we know that the balance sheet consists of three main accounts, that is assets, liabilities, and the owner equity. So once again, there is no debit and credit involved in the balance sheet. Let me clear you. If you are quite expert enough, you can remove these extra line available in this table and you can directly write down this title as mentioned in the adjusted trial balance. So let's go back to the adjusted trial balance and to analyze this adjusted trial balance for the sake of making a balance sheet. So we have to analyze and figure out what are our asset portions. So the asset portion over here are starting from cash to the accumulated depreciation office equipment. After that, we have only single liability. Afterwards, we have a single capital account. But there will be a one tricky step which I'll discuss you while discussing the balance sheet. So what we are going to do is to pick up the assets value and bring them into the balance sheet. Here it is. We have carbon copied all the data from adjusted trial balance and mentioned over here. For building, it was 90,000, but there was a contra asset account having $750, which was showing accumulated depreciation for the building, which needs to be set off with the original cost of the building, and the resultant final value should be written in the right hand side. Let me tell you once again, there is no debit and credit column at all. After that, office equipment cost was 21,000 and its accumulated depreciation was $1,050. You have to mention it in a bracket so that it represents that you are subtracting this accumulated depreciation against the original cost of the asset, and the resultant value should be written down in the final column. After that, you have to sum up all the assets value in order to have the total value for your assets. So the total assets for the company come up with $156,950. After that, we have to mention, as we know that as in the balance sheet, what we are actually following is an accounting equation, that is assets must be equal to liabilities plus owner's equity. So this equation must satisfied in the balance sheet. So liabilities, let's go back to the adjusted trial balance and to find out the liability. So liability is $14,750. Let's move ahead towards the balance sheet. In a report form, the account payable was taken from the adjusted trial balance and written down in the balance sheet as $14,750. Since there is no other liabilities, so therefore the total balance, that is total liabilities for the company, are $14,750. So the last portion of accounting equation, that is to discuss the equity. We can give the owner's equity title and the owner name is M. Valentino Capital. So let's go back to the adjusted trial balance and find out that the capital value over here is $136,650. But remember, let me tell you the trick over here, that you are not required to use this amount $136,650 while you are making the balance sheet, because you have already constructed an income statement and this part of net income has been added up in your statement of owner equity, and you have already made this statement of owner equity in the next step of making the financial statement. Therefore, the final balance of this owner equity statement shall be used in your balance sheet, and this kind of relationship between the financial statement is known as articulation. So as we have used the final balance for the owner's equity from the previous financial statement, and the statement says that assets are equal to liability plus owner equity, so the total assets with the company come up with $156,950. So the asset must be equal to the liability and owner equity. Therefore, we have to add up the liability and owner equity and the total balance is once again equal with each other, and hence our accounting equation, which is assets are equal to liability plus owner equity, has been satisfied. So this kind of results automatically give you a glimpse that you have done your entries correctly. So here we have completed the accounting cycle step number. Let me tell you that we have completed that. From adjusted trial balance, we have made the income statement, we have made the statement of owner equity, and finally a balance sheet in a report form. So after preparing the financial statement, let's move towards the second last step, that is to, or in reality, a last step is to journalize and post the closing entries. So we'll discuss shortly how to close down the nominal accounts. Let's go back to the question instruction, and part E is expecting us to close down the entries. So it is requiring us to make the closing entries. So for closing entries, you have to once again go forward to the or go back to the adjusted trial balance, and you have to find out the nominal or temporary accounts of this specific time period. The nominal accounts required to be closed down are the revenue of this time period and all expenses of the time period. Along with that, any dividend or withdrawing by the owner. So we'll have to start from the revenue portion to close the entries. So first of all, we have to close down this commission earned so that when the next time period may start, the commission earned account must have the zero balance. So for closing entries, as we know that the commission earned is in the credit column in the adjusted trial balance. So for closing this balance or showing this balance zero in the commission earned account, we have to give a corresponding debit entry to the same title, which is commission earned. Or and otherwise, I can say that you have to reverse the expenses and revenue entries what are there in the adjusted trial balance in the closing entries. So let's see how to do those entries. Here we have our closing entries. You have to mention the company name at the top, and then what you are performing over here is closing entries. You have to use the journal pattern, for which I will not waste my time, as I assume that you understood the format of a journal consists of date, account titles, debit and credit columns. So at the end of March 31st, you have to close down the revenue section first. As we know that commission earned was having credit balance in the adjusted trial balance. As we can see over here, once again, the commission earned is having credit balance in the adjusted trial balance. So in order to close down this account, we have to give a reverse entry to the commission earned. So we can see that we have reversely entered or written commission earned in the debit column, and we know that debit and credit will set off each other, and finally the balance in the commission earned will be zero. And this commission earned has been transformed or transferred to another account title named as income summary. We assume that this complete 20,000 is our net income, for instance, to close the revenue account. In the next step, the second closing entry is for expenses. The first was for revenue. The second is for expenses. We usually perform 4 closing entries. For that purpose, you have to once again go back to your adjusted trial balance and find out all expenses. As you can see that expenses balance is in the debit column. So for closing them down, in order to have zero balance available in these titles, we have to give a cross credit entry in the credit column. So what we have to do is to pick up all these expenses from the adjusted trial balance, write them with proper name or titles. And rather than to inserting these values in the debit column, we have to insert these values in the credit column under the closing entries. So you can see that we have picked up all the expenses available in the adjusted trial balance, and rather than to mentioning them in the debit column, we have mentioned them in the credit columns. That is, we have given a cross credit entry to the all expenses. And as we know that in the adjusted trial balance, the balances against these expenses were in the debit column. So therefore the debit and credit will cross each other, and these account titles, which are nominal accounts, will close down. And what title should be given for the debit entry? Income summary should be debited. As we know that previously we assumed that we have earned 20,000. However, in the next step, we have charged certain expenses against the income summary. Therefore, the income summary will have this time a debit entry into the closing entries second section. Now here come a very easy technique to close down this temporary account as well, as we have generated this title as a nominal title to represent our income. And finally, after setting off this income summary title, we have to transfer this income into the owner's equity section. After giving a closing entry to the expenses, we have to give a short narration in the brackets to close expenses account. So after closing the revenue account in the first phase and closing down the expenses account in the second phase, the next step is to close down this temporary account what we have generated in the previous two entries. One time in the first entry, income summary is having a credit balance of 20,000, and in the very subsequent entry, the income summary is having a debit balance. After setting both or subtracting these values from each other, we have realized that the credit side is greater than the debit side. So therefore, the income summary is still having $10,050 in excess of debit amount. So this resultant additional amount is credit. So therefore, in order to close down the income summary balance, which is in the credit form of $10,050, we have to give a corresponding cross debit entry to the income summary account in the third step. So in the third step, we are going to close down our temporary account, which is named as income summary. This is why this income summary is having a debit entry with $10,050, because after subtracting the first income summary from the second income summary title, the remaining excess amount was in the credit side. Therefore, in order to make it zero, we have to give a debit entry. So in the third step, we are going to transfer this income into the company's owner equity section named as M. Valentino Capital. So this income is basically transferred into the capital of the company with the title of M. Valentino Capital, and our owner's equity will get a credit with the amount of $10,050. After closing down the three main entries, we have to finally close our drawing a dividend section, for which we have to go back to the adjusted trial balance. Here we are once again in the adjusted trial balance, and we have to close down another final temporary account if drawings are there or if certain dividend payments are there. So M. Valentino drawing is having balance in the debit column. As we can see, this is a debit column. So in order to close down this account, we have to give this title a credit entry into the closing account. And which account will be having a debit in the closing entry? So definitely when there is drawing, it is from the capital of the company. So let's move forward to the closing entry section. So we can see that as in the adjusted trial balance, M. Valentino Drawing was having a debit balance, but while you are closing, you have to mention this title in the credit column, and correspondingly, you have to debit the company's capital account because this money was withdrawn from the owner's equity portion. So the owner equity will get a debit entry and the drawing will get a credit entry, and this cross entry will finally close down the drawing account. So this is the way how you can perform the final step of the accounting cycle, that is to close the nominal account or temporary accounts. The purpose of closing is to make or keep the account balances zero for the next subsequent start of the new time period or new accounting cycle. After that, if we wish so, we can make an after closing trial balance, that is after closing down the nominal account, we can make our final after closing trial balance. Let's see how to do that. But before that, we can go back to the questions instruction, and the final instruction, that is part F, is actually requiring us to make the after closing trial balance. So for making that, we have to go to the adjusted trial balance. Here we are in the adjusted trial balance once again. And as we know that we have closed down these accounts starting from the drawing section to the capital to the commission earned, and all expenses have been closed down and there is no balance available in these titles. So therefore the after closing trial balance will consist of only title in above to those mentioned over here. So let's go ahead to make our final after closing trial balance. We have to follow the company name. After that, we have to write down after closing trial balance because we have already closed down the nominal accounts. So therefore, the title for this statement will be after closing trial balance. And we have to mention the specific date. And once again, since this is a trial balance, so we will have a debit and credit column for this statement. Rest of the explanation are already explained to you in my previous lectures. So we have mentioned all are taken up all the values from the adjusted trial balance except the final one, which is the M. Valentino capital. The reason is that we have already made the statement of owner equity. So therefore, after making the financial statement, we have to follow those constructed financial statement for the later steps. So as we can see that the final balance in the owner's equity section is $142,200. So therefore, this is the final owner equity, that is M. Valentino capital, should be used for the subsequent steps. So let's move ahead towards the adjusted trial balance. We have to select and opt the same data available in the debit and credit columns for these titles. However, for the owner's equity or capital section, we have to select the data or opt the data from the statement of owner's equity. So you can counter check that the same values have been written down in our after closing trial balance. As for the cash, for account receivable, office supplies, land, building, then accumulated depreciation building, office equipment, and finally accumulated depreciation office equipment, our one and only liability $14,750, and finally this M. Valentino capital, which is point to be noted to the student, is to be selected from the statement of owner's equity, not from the adjusted trial balance. After that, the final step and the counter check is to add up the debit and as well as the credit column values, and if both sides equals, you must be amused and pleased that you have done your all entries very nicely and correctly. So the total of debit is now $158,750 for debits, And for the credit columns, it is $158,750. Afterwards, bear in mind to not to forget sketching the double line beneath the final balance that will represent that this particular financial statement has closed down over here. So this is the final step of the accounting cycle. Let's move ahead. So our accounting cycle has been completed at the end of this lecture. We have done our we have made certain adjusting entries as this couple of lecture consist of. After that, we have made our adjusted trial balance. Out of that, specifically this lecture addresses how to make financial statements, that is income statement, statement of owner equity, and the balance sheet, after which we have closed down our nominal accounts or temporary accounts. And finally, after closing the nominal account, we have also made the after closing trial balance. So basically this accounting cycle has completed with the help of a numerical illustration where the data at step number 3 was given, and from this data we have completed our 4th, 5th, 6th, 7th and 8th step, and here we have completed our discussion pertaining to the accounting cycle. I hope that now you have understood how this complete accounting cycle continue on and completed and go on from different phases. But still, if you have any confusion at any stage of accounting cycle, you are free to ask your question on KCMS. Otherwise, you can also email me with your queries on my official email address as mentioned in the footer of this lecture. Thank you very much for listening to this lecture. Good luck for the day. Allah Hafiz.